In this video, I'm going to talk about something I noticed recently on Tradytics called the flow timeline. I mean, it's always been there. I just never have really paid too much attention to it, but I noticed some data and feedback from this tool that maybe could be useful going forward. This is very much a preemptive video where I'm just going to talk about what I noticed and how it correlated and how I think it could be useful in the future. And then I'm just going to watch it for the next several months and see if it actually provides an edge. And then I'll update at that point. But if you're on your Tradytics and you go to Market Dashboard Options, that's where the Flow tool is. It's the same page as MarketNet Flow, right? I've done a bunch of videos on that. But you scroll down a little bit, you get to the Flow timeline. And essentially all this does is show you the net premiums for a bunch of different expiration dates, right, in the near future, okay? Right now it's going out to early October, and here we are, it's the beginning of September. And the thing that stuck out to me is the September monthlies. So you can see that this line is so much more active than everything else. Like a lot of these lines are just barely moving, right? They're maybe chains that just no one's that interested in relatively compared to some of the other ones. So very active chain here, which makes sense. It's the September monthly contracts. Those tend to get the most volume and it's the nearest monthly expiration. But it shows you the date at every nodule here. It shows you the date and the current level of net premiums. So here at the peak, it's August 12th, and there's 35.5 million net call premiums. Okay. Bullish, right? If we go to SPY and we're looking at the chart on the 12th, we're here, this very bullish day. We break out of a little bit of a consolidation and make a new all-time high. And then during the 13th, 14th, and 15th, we're kind of flagging tight at all-time highs, all right? Let's go back to this tool. On the 13th, 14th, and 15th, they're selling. It could just be profit-taking, right? When you have calls open and you close them, that decreases the net calls being held in the market. So it could just be profit taking. We're at all-time highs. We're consolidating. Maybe there's, people are worried about some news that's coming or some data reports or an FOMC or whatever the case may be. And so they're locking in their profits. That's fine. But it also tells you that, there's not as much bullishness in the market at that time with all of these people either taking profit or maybe even straight up selling calls, like writing calls, which is bearish, correct, right? So just in that few session span, we went from 35.5 million net premiums down to negative 53. That's almost 90 million premium swing. That's massive. Okay. You can see today that, fairly bullish day, a lot of call buying, and we're topping out around 50 million net premiums being bought today on MarketNet Flow. So 90 is a lot. Okay. And what happens on SPY following that 3 days of selling, even though we're kind of consolidating, it starts to kick off a pretty sudden and nasty pullback. Okay. Then on the 20th, in the middle of the day or so, after some hard selling, bulls step back in. All right. And we print this huge hammer candle. So we go down here and we see that the 20th is this day with kind of really no activity. You had the 19th and then the 20th, not too much more selling of calls or anything like that. Not really any buying of calls, but just price, the move had already started. They'd already started selling up here and then we got the move. And you put in that hammer and that's a pretty bullish looking candle, right? After a couple days of selling, a big wick down on pretty high volume above average. And then you get this little inside day, which is I love to play the inside days, right? They give you a good chance, whether you're bullish here or bearish, to get a tight risk and make your move. And either you're looking for the breakout or the breakdown, right? But what we'll notice is what happens on this inside day, the 21st, they're buying again, right? Quite a bit. But price isn't even going anywhere yet. They're loading up again. And then what happens the next day? Boom. Big breakout again. So, and then we obviously see a lot of buying, and that buying is mostly continued since. So, like I said in the beginning of the video, this is just not something I've normally tracked at all or cared about, but this caught my eye. And it's something I'm going to be watching in the future to see if maybe it can help me kind of anticipate some moves in SPY in the market in general. And I'm going to watch the next couple months, and I will report back later towards like maybe the end of the year, and we'll see if this thing actually can provide an edge, guys. Hopefully that helps. If you have any questions, let me know. Thanks for watching.